Okay, great. Well, we're going to transition to our headliner for today. I started off by saying this gentleman and I have a relationship that dates back to probably, like I said, about 8 years or so. He was one of the first people that put, taxes and business professionalism in a totally different perspective for me. And so I've been utilizing, my wife and I have been utilizing his services for quite some time now, every year. But more importantly, the goal of this presentation is for you to get the knowledge. What you decide to do with the knowledge is totally up to you. But as you just saw, the Angie Network's goal is to make sure you stay in the now with what's important, and we get rid of the fluff so you can just, process the meat and potatoes with what we do. So I'm going to bring to the front of the call, without further ado, our business professional tax specialist, Mr. Rodney Lamb out of Dallas, Texas. Mr. Lamb, are you there?
You hear me okay, Mike?
Man, I got you loud and clear, brother.
Good deal, good deal. Just want to say a big salute to everybody that got on this morning. I think it's so important that you really look at your business seriously. And when you discuss business, there's no more aspect of business more serious than the taxes. And so I definitely want to make sure that we go over that. But let's go over this company disclaimer. Truth Induced is not associated with any company, nor was Truth Induced endorsed, paid, or compensated any financial income to share the factual information within this presentation by another financial company. Truth Induced does not guarantee any strategy shown in this presentation, nor does Truth Induced participate in the advice through presentation with the intent to entice, persuade, or manipulate any individual toward a decision. Now, I always give this extra disclaimer because I want all people viewing this to understand this is not a tax loop, a tax shelter, or a tax scheme. The information shared in this presentation are tax law and tax code that are legally allowable to business owners with proper documentation. And I always want to stress that fact, proper documentation. And so we've heard so much valuable information this evening, and well, this afternoon. And so what I like to do is bring us all into the mindset of where I want to kind of take this presentation. And this is a question I love to ask. I've been asking this almost 20 years now because it focuses us on what I want to speak on. And so I'd like everybody to rhetorically ask yourself that question. What's the difference between the rich, the poor, and the middle class? And I want to share mine. You know what the poor do? They just buy stuff. And they buy stuff and they buy stuff. Nothing really comes in, yet and still they can buy stuff. The middle class purchase liabilities and assume that they're assets. Nothing really, they don't tell you about the mountain of debt that they're building in the background. And if you didn't know, ladies and gentlemen, credit is debt. And the rich, what do? They purchase assets, ladies and gentlemen, but not any particular kind. I want you to Google the word asset for me, and then I want you to see that there's actually a list of assets. But more importantly, I want you to look on that list and see how many things you own on that list. And let's see if you are spending correctly or spending rich. You see, what rich thinking says, I think it was Kiyosaki said, a lack of vocabulary is worse than being broke because you'll never know how to get out that brokenness state of mind. And so I want to share some vocabulary with you for this presentation so that we're all on the same page. Passive income for this presentation is just income being taxed at the lowest rate. This is what the rich are buying, spending. Cash flow is money being deposited into your account and spent from that very same account, creating that circulation, ladies and gentlemen, preferably a business account. And residual is just money made with no effort, slow and for sure. You see, this is the goal of business, to create that residual. But what I really want you to think about is the last thing you bought. Did it do these three things? Did it create a passive income that eventually turned into a cash flow of residual income? Mr. Gaskins just referred us something, a beautiful asset that can do these three things. I encourage you to look at that because that is rich thinking. And so, who can be rich? If anybody, ladies and gentlemen, why not you? You see, we really want you to think about this. But what I really want to focus on is what plagues this country. You see, it's a lack of financial literacy. And so we want to make sure that you have the proper information. You see, consumerism, impulsive spending is one of the worst plagues in this country. See, you're not realizing that 3,000 marketing cues hit your eyes every time you leave and every time you come home. And so you're being marketed to on another level. As you can see, the AI is now going to start watching your facial expressions so they can see if you're ready to buy. And so consumerism is one of the plagues. What about indebtedness? You can borrow money and not even have any money in this country right now. No job, no source of income, and they'll still let you borrow so that they can put you in debt. Don't believe me? Go to Cash App right now. They'll let you borrow money. And you don't even have to prove income. And so when you look at this, and this is what we're going to be speaking on today, excessive taxation. You're being taxed on a level you don't even understand, ladies and gentlemen. And so I want to share some of the facts with you so that we can really put together a strategy against all of these things. Now, here's another question I love to ask, no matter where I am across the country. What's the greatest expense you'll incur in your entire lifetime? And no matter where I'm at, these are the three everybody stress: home, children, and education. The reason being because these are the real bills in their life. But we want you to understand, if you didn't know, taxes is the greatest expense that you'll ever incur in your entire lifetime. You see, before you were born, taxes were being paid on you. When you breathed your first air, taxes were being paid on you. But did you know after you die, you have to file taxes one more time? Even when you dead, you owe taxes in this country, ladies and gentlemen. See, I want you to think about you, your housing, transportation, food. Taxes exceed all of these combined. You can add them up and you will see that you're paying more in tax than you are incurring in these items. And you think this is your entire life. And so taxes has weaved and been woven so much into our society that you cannot avoid them, ladies and gentlemen. They are everywhere. So the best thing for you to do is get informed, find out what taxes are applied to you. You see, as an American, I put a few that you have to pay. These are just about 23. You're not paying every single one of them. But I assure you, they'll tax you on a few of these some type of way. The biggest one is the local income tax in the middle. Whatever city, state, or county you live in, you pay a tax every time you purchase something. And so we want you to understand you are paying taxes. And so where do the taxes go? As you can see, tax dollars are spent in many places, but majority to the military. And so you know where your money is being spent, you know where it's going, and by law, they must collect. And so if you know all of this has happened because you chose to earn a dollar, ladies and gentlemen, posed to you, what's your tax strategy? And when I say what's your tax strategy, I mean specifically, what do you do to lower your tax liability? See, they have a plan for you, but do you have a plan for them? And so that's what we want to go over today. I want to teach you that there's two tax systems in our country, one for employees and one for business owners. You see, in the case of an employee, they're taxed up to 12 times, few deductions, they're limited to certain schedules. Earning actually hurts their bracket. They're taxed on their income before they even receive it. And you're given a retirement date of 20 years, usually. They don't need you after that. And in the case of a business owner, you're taxed after business expenses. Over 500 deductions you qualify for. You can use all schedules. Earning is actually encouraged. Your earnings are offset by your expenses. And your retirement date is whenever you deem yourself successful. And so if I were to ask you which is the best option, of course you would say the business owner. Then explain to me that why did 80% of our country choose to be employees? Because you heard just like Rodney, go to school, get good grades, and get a good job. And this is the way. And just like Mike was explaining earlier, our kids are not trying to do that way anymore. And so we want to make sure that there are ways to lower your tax liability and increase deductions at the same time. And this is why I truly believe that home-based business is the best tax strategy ever. Because if you're an employee right now, your goal is to lower your tax liability. You have a job and receiving a W-2. But as a business owner, you're only looking for more deductions. What else can we write off? What's another way to lower my tax liability? And nothing does that better than a home-based business. And that's why I believe it's the best tax strategy ever. Now, my thing is, I truly believe that every person should have a tax goal. See, these are the habits and behaviors you intend to change to achieve that goal. There must be some change. And then the tax strategy or the methods applied to manifest that goal. And then I totally believe that without a tax target, and that's the amount desired on the ability to aim, you cannot activate yourself. I ask clients all the time, how much do you want to get on your refund this year? And most of them don't even know that you can actually plan that refund by design. You see, we can plan the result, ladies and gentlemen, and this is what I truly believe. And who am I? My name is Rodney K. Lamb. 22 years, 23 now, I've been in the industry. 21, 22 as a pro. 17 going on 18 years now, we've owned this firm. And my education stems from a Bachelor of Science in Humanities and a minor in Business Management. Now, my tax credentials stem from TaxWise University, SFS University. I'm a member of the National Association of Tax Professionals. I'm PTIN certified, meaning I can do your taxes for a profit. But I think it's most important to know that I'm the Ethan holder, meaning we own the firm and not just work for it. Few accolades I'm proud of, still currently the #1 reviewed tax pro in the country. And that's positive testimonies and happy reviews. And I tell everybody, I could share all the knowledge I'd like, but if you don't have anyone receiving this, none of it is real. And so I'm very proud. My clients have responded with reviews and great testimonies. I've fortunately been able to join these companies a while back and put designation behind my name now. So no longer am I a professional, I'm now a tax specialist. CTRS is a certified tax resolution specialist. So if you get audit letters, I can definitely represent you. I love that aspect. And then NFEI is a national financial education instructor. I also teach money, and we teach people how to manage money management and how important it is. The one accolade I'm most proud of is our 10 plus years with the A plus with the BBB. And that's with zero financial complaints. And I think that's important because we have clients over 32 of our 50 states. And the BBB said it was phenomenal for to have no complaints from all of these clients across the country. And we shared with them what I share with you. Good news travels just as fast as bad news. And so we just happy the good news has reached you today. And so let's talk about cryptocurrency. And so what I want you to know immediately, owners, beware, be aware. And so the IRS is watching you. And they're watching you by several different ways. One is on your tax return when you actually file them. There's a question on the front page that asks if you disposed, sold, exchanged. If you don't realize if you answer that one question wrong, it could mean problems for your file. And so we definitely want you to make sure that you're informed enough to verify that that question was checked and answered correctly. The cost basis and sale proceeds on your info transactions, like your Coinbase wallets and all of these wallets, they are now going to be reporting on you. And so you want to make sure that you have a good record or ledger so that you can verify these and that people make mistakes. And so do companies in technology. And we want you to be aware. The new law is in effect, ladies and gentlemen. Anything 10,000 and above must be reported in 15 days on an 8300. And so if you earning seriously in your trades, you definitely want to be aware of the new laws so that you can take advantage of them. And what is a cash out? I love to explain to crypto that cash out is when you take digital currency to fiat. As soon as it goes from digital to fiat, USD or whatever country you in, it is a cash out. And you are now responsible for taxes on that. The tax rates have changed this year, which is good. They're going from 10% to 37%. So that extends it for everybody. You now anywhere between up to 11,000, I think is just 10%. And so you definitely want to make sure what bracket that you're in. And of course, you'll be filing these on a 1099 B and D. And so these are the forms that you're going to be filing on this year. And this is how the IRS will be looking for all your crypto transactions. And so I'm encouraging you to be aware of this information, most importantly. What is business? You see, most of the time when we look at business, business is the activity of exchange with money or barter for goods or services. We want you to understand you must remain in a business mode. And you do this by what is your activity of exchange? And so make sure that you're documenting your activity. A lot of your business activity is sitting in front of the computer clicking. And so if it's not documented, ladies and gentlemen, it can't be verified. And so I'm strongly encouraging a lot of investors and traders to start documenting with a weekly log. What is your behavior? What is your business activity? And if you didn't know, a business day is 4 hours and 1 minute. 4 hours and 1 minute is what the IRS considered a business day. And so we understand that there are really just 6 fundamental forms of investing: business ownership, real estate, precious metals and commodities, stock, CDs and bonds, insurance, and of course, digital currency trading and investing. And so what everyone on this call, especially my guests, have an opportunity to do is link into 2 of the major parts of this industry. And so when you look at business ownership, which I encourage you to be, there's no reason to invest as an individual when you can get deductions investing as a business. And so the profits are always cover themselves. The problem is that many of us have a business and no plan. And so that's what I truly believe. The solution is the business plan. Let's put a plan together how we intend to invest. Today, specifically, I'll be going over some of the financial planning that you should be doing. And so, but as you can see, a business plan is comprised of so many things: background, executive summary, marketing plans. And so when you look at this, let's look at what as a taxpayer. And I say Trip, but I want you to think about this, investors. And see, you're not realizing that your title is trading in consulting investment. Trading and investing consulting. That's what your title is. As a taxpayer right now, everything is viewed as personal. Nothing. But as a trade investment consultant, everything is business. Everything is tax deductible. Your local travel, related expenses, all of it is tax deductible. And I want you to understand consulting is the best industry for yours because you actually consult on trading and investing. I just saw this entire presentation was a consulting matter on trading and investing. So I highly encourage you to go out and register your business as so. Make sure that you're doing that as a trade investment consulting or in the banner of consulting. This allows you to officially be a business now. You have to think about it. If you're a guest on the line, and if you're already in the act of marketing, financial, and trading information, that activity should be your business. You see, you're already doing it as an individual. Why not make it your business and write it off now? It just makes sense. And so once you become a business owner, what would be the liabilities? Is what a lot of people wonder. Is it a lot much more? See, right now, you file a federal tax return, and some of you file a state return. But once you become a business owner, you may have sales tax, you may have a franchise tax, and if you have employees, you'll have a payroll tax. And so, what are you liable for as a business owner? It could be a range of taxes, just depending on how you're structured. And so that's why structure is so key in the beginning. And so in the beginning, everything is new. Not only are you new, your business is new. Consider the startup. So a lot of things will be new. Right now, congratulations, crypto. It is now viewed as cash and now a form of currency. And so with that, not only is it good, but now you have to report more. Now every transactions need to carefully be watched. And the wallets and some of these companies are being forced to report every time you trade. And a lot of this information, once you reach it, will be on the Schedule B or a Schedule D. And so we want you to know personal ownership is not your goal. Business ownership, we want business to own these assets. And that's what the goal is. Record keeping is going to be key, ladies and gentlemen. Did you document the gain or profit correctly? And you want to do that every time. You see, your gains you report are subject to income tax, and that rate depends on how long you hold it. Short term is usually between 1 year, and long term is usually a year or more. And so you want to make sure that you have a real goal with your investing. If it's short time, know that your taxes will be more. And if it's long term, know that we'll pay less in taxes for a long term holds, cashing out. Now, 3 must knows that you have to know about virtual currency. And that's number one. If you hold it, ladies and gentlemen, you do not have to report. If you hold it, you do not have to report. And I stress that because this should be the goal of an investment anyway. How long is your investment goal? I tell every new client 2 things Rodney want: a cash out date or a cash out number. And that's going to give you an opportunity to keep your portfolio fresh and keep it going with the up to date investments. And when you look at this, if you sell or exchange, you must report, ladies and gentlemen. Please know that. And not only should you be, the company is going to be documenting, but you should be documenting as well. And then I definitely want you to know, if you cash out, you must report the profit and or loss, and you will be taxed according to the length of time you held the capital asset. And that is important, the length of time. And so I stress that. Have some goals to hold it so you'll be taxed at the lowest rate. And please understand, the washout rule will not apply to cryptocurrency because it's not a stock or security. Yeah, we just gonna say yeah. Now, 7 must knows that I like to share in the beginning of this presentation is the borrow advantage. We don't consider this. The interest expense from the loan, that will reduce your taxable investment income. Business is properly done with other people money. And so let's get you in a good position so we can use other people money to take their chances of business. You see, you want to think about capital losses. You literally can take a loss through your personal situation that will help lower your tax liability up to $3,000 to offset your capital gains. Then you have to consider you can barter virtual currency. You can use virtual currency as a means to pay for goods and services. So instead of using fiat, use your virtual currency, and we can get those same goods and services. And if the other individual doesn't cash out, where is the recording necessary? And so we want you to start using some of these to really get some things done for you here in society. Gifting virtual currency, the biggest misover, and most people forget. You can literally give away virtual currency as a bona fide gift to a qualified nonprofit. And I mean up to 15,000, and receive a $15,000 tax deduction. It just makes sense, ladies and gentlemen. You want to make sure that you owning multiple digital wallets is not a bad thing. You can transfer money between wallets. No income if you it's not considered income if you own all of the platforms. And as long as you don't cash out, it is not, no taxes are required. And so we definitely want you to know owning multiple wallets is not a bad thing. And we want you to remember, how is virtual currency taxed? It's taxed long term or short term. And so definitely want to make sure what your goal is. And claim your income, ladies and gentlemen. 8300, 1040 NR, Schedule B, Schedule D. Make sure you're claiming your income. Your records are important more than ever, because this year the IRS is definitely watching cryptocurrency. I want to give you a few quotes. The tax law is a compulsory payment for which no specific benefit is received. This is the U.S. Treasury opinion of a tax. You see, I want you to understand 2 words in that statement: compulsory payment. Why are we using words like compulsory in the land of the free? The truth is that we have such a limited budget, such limited manpower to enforce the income tax laws and collect the revenue, that the only way to keep them honest in paying their taxes is to keep them afraid. You see, we want you to understand the IRS literally applies fear tactic so that you will pay a tax. But even more, I kept this on here because the IRS just got an $8 billion grant, hired 32,000 auditors. So they have the manpower now. Be prepared, ladies and gentlemen. They have the manpower now. You get a raise every time you can legitimately avoid paying a tax on something. And 2 words I want you to focus on here is legitimately avoid. Because this presentation is not to teach you to evade taxes. Tax evasion is illegal, ladies and gentlemen. But I am here to teach you tax avoidance is not illegal. There are laws written to teach you to avoid a tax. In fact, these laws were written 106 years ago. no one on this presentation was alive. And so we are here today just to teach you about a law that you may have not known about. And so I want to give you a few expenses on the screen. And if you were to look at these expenses, you would consider these your everyday expenses, and that most of you probably spend or indulge in one of these every day. And so what I like is that this is just 9 sheets on this screen, and it's 9 deductions that you qualify for. See, as an individual, none of this is tax deductible. But as a business owner, you immediately transition all of these everyday expenses into tax deductible legal write-offs as a business owner. The fact that I like is that these are 9 deductions, but there are 491 missing deductions on this screen that you qualify for. We just need to have a conversation and see how many of those 491 we can apply to you. But if you look at these 9, you would think that's your everyday life. And so this is why I love home-based business. You literally get to transition your life into deductions legally. Now, working in your business and working on your business are 2 different things. What I like to teach trade and investment consultants, especially, is that there's a duality to you. And you need to understand that. When you work on your business, this is goal setting, visualizing, marketing, tracking your profits and losses, creating a system, employing. And when you're working on your business, working in your business, that's when you're out prospecting, day-to-day operations, sales. Y'all have to understand, if you don't make any sales, there are no profits coming too. When you invest, you want to invest in winners and hope that they come back. So analyzing is key. Learning, never stop learning. One thing I know about Johnny and Mike, they don't never stop learning. And that's a lot of these traders on this call, because I see a lot of familiar faces and I see winners on this call. And so y'all saw Mrs. Minifield testimony. And when you look at that, because she works in and on her business. And so that is a great testimony and proof that there's a duality to you. I want y'all to think about this. There are over 500 plus deductions you qualify for. And so your duty, I say duty, is to unlock them all. You see, we want you to understand everything doesn't apply to every individual. There's a new yacht deduction. If you don't have a yacht, it doesn't matter. And so we want you to understand, but whatever does apply to you and whatever new you do have, let's transition that into a business expense. If you're a guest on the line and you're not in the business, did you know, thinking about a business, you've already received your first tax deduction? Exactly. The law says allows you the deduction for startup expenses, thinking of as the money you spend while thinking about or investigating the business. And that's what a lot of guests are doing on this call this evening. So while you think about it, you just racked up your first deduction. Here go a few just to give you some common startup expenses: travel expenses to gain the knowledge, training expenses, cost of purchasing books, advertising. While you can start accruing these expenses as you begin the business, I do want you to focus, and my point is that the expense does not count until you actually start business. So I'm encouraging every guest on this call today who start today as well, because not only starting today allows you tax deduction, but allows you to go back 180 days. So starting in mid-February will make it seem like you've been in business all year long. And so that's a great tax law to take advantage of. And that's the goal. My goal is to teach you to transition your everyday expenses and the tax deductible expenses legally. And I stress legally, ladies and gentlemen, because none of this is my opinion. This is why I love my industry. My industry is law, just like criminal law and civil law. Tax law is the same. And so if it's written, if you can do it, it's written, ladies and gentlemen. If you can't do it, it's written, ladies and gentlemen. There are no gray areas in my industry. That's why I'm proud to share this information, because none of it is my opinion. And I strongly encourage you to verify, because truth needs no defense, and there's nothing wrong with verifying the truth. And so let's talk about a couple of myths that's in the industry. What is a red flag? A red flag is a tax deduction or tax credit that bounces your return out of the computer and invites an auditor. If you have not committed one of these 4 violations, you should not hear the words red flag from your profession. expenses or credits not associated with your business, items of lavish or extravagant, large deductions out of line, and abusive use of deductions or credits. And so if you have not committed one of those violations, you should not hear the words red flag from your professional. In fact, that's just code for I don't know how to do your taxes. And so we encourage you to get all of your information and go to somebody more qualified. What is an audit? An audit is the IRS looking to prove that the information on return is accurate, the deduction is legal, and that the income is honestly stated. That's not a bad thing unless you're lying. And so the IRS never, uh, they no longer do audits. The procedure is now called conducting examinations. And so they believe that there's a stigma attached to the word audit, so they changed it. And so while the euphemism I don't understand, but I want to give you some statistics of audits. If they're under 25,000, there's a 1.2% chance you'll be audited. 25,000 to 100, 2.5. 100 to 200, 4.7. And 200,000 and up, just 3.3. So where are the audits? Where are the audits for people getting in trouble for adding cryptocurrency and consulting to their taxes? It's not, ladies and gentlemen. We concluded that audit is not a bad thing unless you're lying. You see, if you really spent the money, then we're going to really write those things off. The bank account really kept proof. And so we have all the documentation. And so we can really get these deductions, ladies and gentlemen. Here's another fact of fiction. After 3 to 5 years of taking a business loss, IRS is going to audit you. This is fiction. See, we want you to understand legally, you have up to 22 years to record a business loss. And so the law is again on your side. And so we want you to take advantage of everything that's yours. Here are the rules, though. Spend it or give it to them. It's just that simple. But when you spend it, you have to spend it in the name of business, ladies and gentlemen. 80% of Congress owns a home-based business. So they literally write law for themselves. But did you know if you own a home-based business, they're literally writing law for you as well. And you can take advantage of every law that they've written for themselves. And so here's one, according to Congress, not Rodney, any taxpayer who runs a legitimate home-based business, whether part-time, full-time, or spare time, because you know someone who doesn't have time for your business. You let them know they're perfect for your business, because even in your spare time, you only need to meet 2 requirements. Run the business on a regular and consistent basis, 10 hours a week to qualify. We want you to understand that there's 168 hours in a week. You can definitely pick 10 of those to qualify your business and run the business with the intent to make a profit. And intent cannot stay in your mind in my industry. It has to translate to proof and documentation, usually in the form of a business plan. This is how you prove your business intentions. And this is why I truly believe home-based business is the best tax strategy ever. And when you look at this, ladies and gentlemen, it really can change everything about your refund. And so let's talk about the credits and deductions. What is a deduction? A deduction is an expense associated with your business that qualifies for a deduction. What that means is trading consultants and truckers have similar deductions, but they are not the same. Each business is given a code, and that code determines what that business can write off. And so when you look at this, let's say you're in the 40,000 earner and you're in the 15% bracket. That means you roughly owe the IRS $6,000. Let's say you just used $1,000 of the gas that you spent for the year. What would happen is they would take that 1,000 from the 40,000, giving you a new AGI of 39,000. AGI is just how much you earn for the year, your adjusted gross income. And as you can see, once they put it into your bracket again, your liability went down. But what if we used all of our expenses and it was 20,000 deduction? That would literally remove your IRS debt and start to add money to the refund. And so this is a great way how deductions can change a refund. What are credits? Credits are tax breaks meant to stimulate the economy. What that means is they go away and they come every year. So you'll have to find credits that fit you every year, usually after the fiscal clears. And so if you're in a 40,000 earner, 15% bracket, and you owe 6,000, let's say you receive an energy efficient credit for the 4 light bulbs at your home that are energy efficient. Now you receive $1,000 credit. As you can see, 6,000 is not your debt anymore. 5,000 is the new debt. It comes directly from the debt. They don't put you back through the bracket. And as you can see, ladies and gentlemen, how credits and deductions used together in conjunction could really remove a debt. But what if you don't owe? What if you get about 5 or 6,000? Would it be okay to add up to 6,000 or more to your refund and get a $12,000 refund? That just makes sense, especially if it's legal. And so I tell people, tax credits are most valuable. However, the deductions are written in stone. And so my job is to teach you to revolve your life around these deductions. And every year we find credits that fit you. And this is how you keep yourself in the most tax strategy mode. Just making sure everything that you spend or earn is kept mostly to you. What about if you own mortgage interest and you file on the Schedule A or Schedule C? Schedule A itemizing is like getting 3% of your money, while Schedule C business deduction is like getting 60% of your money. Which is best? Both. Because as a business owner, once you become a home-based business owner, that home is not your home. That home becomes the company's corporate headquarters. And now that home, corporate headquarters, is tax deductible in the name of business. So are the utilities. So are so many things that's inside of corporate headquarters, like furniture. And keep going on the deductions that you can rack up inside of your corporate headquarters. What about mortgage interest? I already pay that, and I filed it on the Schedule A. Well, did you know you can also file it on 8829 and get a double deduction and really start to take advantage of everything that's yours, not just some of it? That's paying Chase $24,000 once and receiving a $48,000 deduction. It just makes sense. And what about meals and entertainment? How do you turn those into deductions as a consultant? Well, in 2018, they changed the law. Now we can get up to 100% of your deductions if your meal is a part of a meeting you're attending, or food at an open house, maybe part of a training or marketing presentation. I encourage you, when you have these presentations, you invite someone to your house, provide refreshments, and ask them to join the business. This will give you an opportunity to not only add income to your situation, put home back into home base, but as you can see, write 100% of your meal off. It just makes sense, ladies and gentlemen. Operational expenses for the consultants. Do you realize that you get 5 outfits in a full year, and five per quarter? My fault. 5 outfits and 5 pair of shoes per quarter. That's 20 outfits and 20 pair of shoes, ladies and gentlemen. We really want you to take advantage of that. What is your uniform for consulting? No one can tell you that. You represent you. I suggest you go out and get the best that you can present yourself in and really take advantage of it. Whose phone that is? That's your phone. And so when you know that's your phone, what you should do is transition it to be the business's phone. And that's a simple free phone call to your carrier with a free EIN. And now that phone is officially the company's. And we can write 100% of that off. Do you know you have to look good for your company when you market and promote it? And so business image maintenance makes your hair, your nails, your haircut, massages. It makes a lot of things tax deductible in the name of business. Entertainment, gifts. We just had Christmas. Well, in the business world, we don't consider it Christmas. We consider it marketing promotion time. And so we take our names off the gift. We put the company on the gift. And now that's a marketing and promotional item from the business. So you can write it off in the name of business. It just makes sense. And we know every time we go out to eat, ladies and gentlemen, we're going to see a waiter. And so when you see a waiter, you make sure that you're exchanging that business activity. You get his information, you give your information, and now that meal becomes 100% tax deductible in the name of business, not in the name of you. And so if you never had a 15-letter word in your vocabulary, I'd like to share that with you today. Contemporaneous. This is what the IRS is using to get business owners. You must, at the time of that, have documentation and proof of the business expense. And so you definitely want to make sure that support records must be created and documented at the time you claim the deduction. And this is why a log is so important. And so when you look at this, a receipt covers so many things that they require, and then the proof of the purchase. And so you want to make sure those two things at base are covered. And so what I do and what I like to share is the 4 elements that you must prove to satisfy the IRS test. And that's time, the amount, the place, and the business purpose. And the main one is the business purpose, ladies and gentlemen, and that's the business reason. You see, you want to make sure the nature of the business. What I like the most about purpose is the expected to be derived. You can literally make a purpose based on expectations. And so this is a great opportunity for business owners to document correctly what are the expectations of this meeting and make that entire event tax deductible. What about your personal home? How do you turn that into corporate headquarters? Well, the IRS say it must carry on a bona fide business. And for bona fide, they mean the business part of your home must be exclusive, regular, and for your trade or business. But it must be one of the following: your principal place of business, check. A place where you meet and deal with customers in the normal course of business, check. And third, a separate structure you use in connection with your trade or business. In English, ladies and gentlemen, that just means the biggest room in your home. You see, we receive tax advantages based on the square footage. So why would we choose the smallest room? And so we definitely want you to make sure that you're taking advantage and transitioning your home into corporate headquarters. Because look at some of the deductions that you can receive. I want you to understand there's so many more, but when you can write off your cleaning supplies, that just makes sense. Because we want you to understand it's not your home, it's corporate headquarters. And that restroom and those facilities are not for public use. And so all of these associated expenses are tax deductible for you, the owner. And so the most missed deduction, and that's mileage. I literally want y'all to look on the side of the road. Most of you are literally driving by thousands of dollars because you forget to document. And so I want you to remember this acronym, MAPS. Every time you leave home, you should be mapping. And MAPS means marketing, advertising, prospecting, and sales. And so every time you leave home, you should be doing one of these things because it could potentially be for business. In fact, I encourage you every time you leave home, make it for business. You see, we going to church? No, I'm going marketing, advertising, prospecting, and selling. You going to the store? No, I'm going marketing, advertising, prospecting, and selling. I always want you to stay in a mapping mode, business owners. You see, when you're in a mapping mode, please understand everything in this slide will lead to cost. But it is one part that will lead to profits, and that's sales. And so I encourage every business owner to always be selling. Do not be afraid to sell. Understand what's required. Understand what you earn and get better at sales because sales leads to profits. But always stay in a mapping mode, business owners, because every time you leave home, it could potentially be for business. In fact, they paying 65.5 cents every mile that you drive. And for 2024, it went up to 67 cents. Literally, as consultants in trading and investing, y'all getting paid 67 cents a mile and you don't drive for Uber or Lyft. That just makes sense, ladies and gentlemen. Taking advantage of every law written for you. And if you're a parent out there, I want to share this with you because this is very serious. Hiring your kids. What you didn't realize, they're not your kids anymore. They're now considered contractors. But the best part about these contractors is that you get a $12,950 deduction per child. And so if you see a mother of 4, you just showed her a $50,000 deduction for a decision she made at least 7 years ago. Because this law applies for 7 through 17. And so you definitely want to take advantage of this deduction because it can really change your adjusted gross income if you have kids. The law requires 3 things. File a W-9 on the child. Simple. File a 1099 and actually file it and create a contract for services performed. I tell everybody, you just write down their chores, erase the word chores, and put job description. $12,950 is the agreed payment, and have the child sign, because you have to pay for the uniforms, the meals, and the lessons. But wouldn't it make more sense if you paid your child and they paid for their own uniforms? You paid your child and they bought their own meals? I literally pay my daughter and she pays for her own taekwondo classes. Not only am I keeping more of the money I have to spend anyway, but I'm teaching financial responsibility at an early age. It just makes sense. And so, one thing I want to stress is your monthly activity, ladies and gentlemen. This is how the IRS considers this: is it personal or business activity? Is it personal or business trading? And so, one thing you want to stress is business purpose, the business reason for the investment activity. You want to be logging this. You want to make sure that your intentions are clear. And you definitely want to make sure it's on your plan. Your transportation day, you want to route that out. You want to make sure that your business destinations are mapped out so that you can get the business deduction for the mileage and all related expenses. Consider your non-business diversions like traffic, the amount of time would have taken out. You want to make sure you're finding those best routes. They actually look at that. And I want to stress again, the time spent on business is 4 hours and 1 minute. I want you to make sure that you're taking advantage of that, looking at your back office, studying the different trades, talking to prospects and clients and partners, and really stressing your business. And most of all, keep records of all of this. You should be keeping a weekly log according to the IRS. And so I stress that as well. Because if you didn't know, ladies and gentlemen, your business activity can count even when you're not making profits. And so most people ask that, well, I didn't make any money. Can I put the business on my taxes? Well, do you have business activity and business expenses? And if you didn't know, you could lose your entire deduction if you're not active, ladies and gentlemen. Don't lose your month just because you're not active. That month you spent maybe $10,000, $20,000. And that monthly fee could erase all of those deductions because you didn't pay that one fee. So I stress to everybody, stay active. That activity really, really, really counts and gives you all of these deductions that we've been going over. And so if you haven't done anything, remember this. Remember, documentation beats conversation every time when you deal with the IRS. They don't want to talk to me. They don't want to talk to you. They just want to see the proof. And so we want you to make sure that you have all the proof that you need. What is value? See, value is not what a product or service does. Value is what a product or service does for you. And see, one thing I know about a product or service, it must bring something for you in order for it to be valuable. Well, I want to talk about how the home-based business turns any price into a tax deduction. Mike shared some prices for the product for our new signups. Well, guess what? Whatever that price, whatever level you decide to invest in, it's a tax deduction. We understand that business has costs because price and cost are two different things. Cost are the expenses related for operational going forward. Do you know that's a tax deduction? Home-based business turns time. See, 4 hours and 1 minute makes it business, right? So we've now monetized time. This is why I love home-based business. Home-based business turns everyday expenses into tax deductions. You're going to spend on these things anyway, ladies and gentlemen. Doesn't it just make sense to position yourself to get something back for it? And home-based business, my favorite, turns taxes into a tax deduction. So understand that you're not getting your taxes done. Your business is. So we're going to write your taxes off in the name of business. It just makes sense. And so with those few things, I just want you to understand, ladies and gentlemen, home-based business is value to you. Not just value, it's value to you as the individual. And so I wanted to stress those because price, cost, time, expenses, and taxes are the main part of business. And so when you can turn all of that into a tax deduction, that is what we consider value. I want to give you 11 strategies to audit-proof your home office. Number one, make sure that that's your admin use. You want to make sure that you're using it regularly and exclusively. Don't rent that area out. You want to make sure that that area is exclusively for your business consulting. Earn income. This is the goal. And if you do repairs, make sure you classify them properly. And so prove expenses. Depreciate correctly, because there's a lot of things that you can depreciate as a business owner. Landscaping is a deduction. You don't have to cut your yard. You can hire somebody. That's not your house anymore. It belongs to the company. And if you can, get a phone bill, a landline. That is a great way to prove business in a home office. Cell phones and operating solely on your cell phone in some instances isn't considered business. And last but not least, document everything. I cannot say that enough. Documentation beats conversation every time with the IRS. They don't want to talk to me. They don't want to talk to you. They just want to see the proof. And so, with that, ladies and gentlemen, I just want to say thank you for your time and attention. Definitely want to make sure, if you're on the website, visit us at truthinduce.biz. Make sure you give us a call if you need to call. We definitely email us, or Facebook or Instagram. Either way, we definitely want to make sure that we're available so we can get you the right information. With that, Mike, I want to turn it back to you.
Yes, sir. Yes, sir. Hey, listen, I need everybody right now, drop some fire in the chat for my good friend and brother, Mr. Rodney Lamb from Truth Induce. Drop some fire in the chat. Let's spam the chat out, okay? Take a screenshot. Of his contact information. I encourage you to reach out to him, get things in order, figure out what you need to do, best practices, and all of that cool stuff, right? And that's what we're here really to share with you how you can position yourself and your family for tomorrow's world, right? And that's what this virtual Super Saturday was about. Mr. Lamb, I know that you are super busy. If you have a moment, if you're still on, maybe we can take 1 or 2 questions.
Yes, sir. If you have a question, I have an answer.
All
And
right.
so